Well, I think, first of all, Goldman Sachs is a company that's going through transitions, and it's not just the new CEO. Trading profits, although they grew this year, this quarter, they've trailed, from just, a couple of years ago. So, Goldman Sachs is a company that's trying to reinvent itself into more commercial lending, other revenues, fee-based revenues, as the CFO just mentioned. So, it's not surprising that the stock has underperformed in the last couple of years, underperformed the market, underperformed its peers. So I think investors are giving a lower hurdle to Goldman Sachs, and it's certainly a hurdle that they've been able to jump over. But we do believe there's going to be a positive catalyst for the new CEO coming in.
Yeah, and you talk about the revenue mix. We've been seeing a decline in trading revenues as a piece of the pie here. I mean, Lloyd Blankfein was arguably seen, well, many things as CEO will define him, but I think really the one who helped the bank through the financial crisis and to reinvent itself in many ways. So as an investor, what are you looking from David Solomon to deliver on?
Well, a couple of things. One is more transparency. Goldman Sachs has a reputation of being more of a sort of a closed, loosely held, partnership, if you will, even though it was a corporation. So more transparency, fresh ideas. I think that's going to be good for investors looking into the company. I think there's more, equality that David Solomon has talked about bringing into the ranks of Goldman Sachs. I think that's going to be great for business as well. So there's a lot of things that we're looking at that I think are good. And frankly, the stock, in our opinion, is very cheap. So it doesn't take a lot, for the stock to do well.
Yes, certainly. I'm not sure how much more DJ David Solomon will be able to do. There's a lot of work to get down to there. But looking at the banking sector more broadly after the earnings results we've already received, what is your assessment? Because there's so many macro tailwinds really working in the favor of the sector if you consider the changing rate environment, what's going on with the U.S. economy, of course. So when you look at just the bread and butter business that's taking place here, have you been impressed?
Yeah, you're right. I mean, you mentioned tailwinds. There's a lot of tailwinds. Higher rates, meaning net interest margins are higher. Deposits are growing because the economy is stronger. Lending growth has been higher because the economy is stronger. There's less regulation. So there's many things working in the favor of banks. And I would say, out of the big four, if you will, Bank of America had the best numbers. Probably the worst off was Wells Fargo, but that's due to the many mishaps they've had in the last couple of years. But overall, the banking sector performed very well.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.